Greetings, everyone. This is Richard Crevo with our chart drill down session for September the 28th. And as I mentioned in our last video on this topic, summer is officially over and the majority of traders are back on the desk. Liquidity is increasing. Markets are more likely to develop a bit of a tempo or a rhythm, a trending quality going forward. At least that's our hope. It's more likely to happen at this time of the year than it was during the summer. Now, regarding the charts that I'll be using, if you have any questions about any of the indicators I use on the charts or why my charts are set up the way they are, please refer to the May 11th YouTube video, which is entitled Chart Tutorial, for an explanation. And if you still have questions after that, feel free to email me at rcrevofx@gmail.com, just like it says there on the slide. Now, remember, these charting drill down sessions that I do are designed to identify higher probability trading pairs. Now, any of the setups that I share with you this evening are by no means taken as an indication that they will ultimately turn into a winning trade. Obviously, we can't tell the future. We don't know what's going to happen. But as I've mentioned many times before, trading is all about probabilities. We want to identify a trading edge to provide us with a higher probability trading opportunity. And the more of those we identify, the greater the likelihood will be that we'll be profitable at the end of a week, a month, a quarter, or a year. Well, with that, let's look at the disclaimers. And once I get there, there we are. And they're listed for you. And just essentially, trading involves a significant level of risk, may not be suitable for everyone. You should only trade with risk capital, and that is defined as money that you can afford to lose. And remember, there's a high degree of leverage that can work for you as well as against you. Very exciting when it's working in your favor, not so much when it's working against you. And as I mentioned, the content provided is for informational, educational purposes only. Okay, I'm going to stop the recording for 1 second so I can set up my charts, and then we'll begin the drill down. Hang on 1 second. Okay, we've got the charts all lined up, and as you may recall from last time and times before, I use a strong weak currency analysis to point in the direction of the pairs that are in the stronger trend. So should you want to know more about that, feel free to email me at rcrevofx@gmail.com. In fact, any questions you have on trading, feel free to email them there and I'll be happy to get to them. Now, the most recent strong weak analysis that I did indicated that the Aussie dollar was the weakest currency and the Japanese yen was the strongest currency. So that's going to be my first stop as I drill down these charts. And let's go to the Aussie yen and see what we have here. As you can see, my charts are set up weekly, daily, 4-hour, and 1 hour in that particular order. And as I see here on the weekly chart, we've got the Aussie yen currency pair making lower highs and lower lows. It's taken out the lower channel line, the lower Donchian channel line right there. So based on the weekly chart, I know I'm looking for selling opportunities. And also we see on the daily chart here that price action is making lower highs, and it made a lower low here. We'll see if it's going to make a lower low at that point. And it has taken out the lower channel, hasn't touched the upper channel yet on the daily chart. So we are still in an open sell situation. Now what that means is I'm looking for selling opportunities to sell this pair on a lower time frame chart. And I can go down here to the 4-hour chart and I can see the pair is dropping here. It hasn't taken out that lower channel yet. But as I look over here to the left, let me enlarge this chart just ever so slightly as I enlarge the chart. And I'm going to have to hang on 1 second here. There we go. It hasn't taken out the lower channel yet, but it has begun to move to the downside on this particular 4-hour chart. So I can wait till it takes out the lower channel line right here at about 82.98, but over to the left here, I see this congestion zone. So personally, I would rather wait until about 82.49 to contemplate getting into the trade. But that being said, getting in the trade at that point only affords me about maybe 60 pips of opportunity. And I like to go after 100 pips or more when likely. But let's go back here and see if we can maybe get into an entry on the 1 hour chart. 1 hour chart is showing me something similar here as far as pip potential, because here's my entry at the lower Donchian channel. And again, I'm looking at about, excuse me, 60 or 70 pips of potential on the chart. I like the pair. I'm not that wild about the entry. It's giving me pip potential. If somebody's a more aggressive type of trader and they want to get in on this trade, what I'd be doing personally is probably setting a price alarm down here at about maybe 83.65 in that vicinity. And then when I'm setting that price alarm, what I'm looking for, when and if that price alarm triggers, what I'm going to be looking for is to see, is the Aussie weakening across the board? Is the yen remaining strong across the board? If that's the case, at that moment, I might consider entering that trade at that point, because the quote-unquote, the stars are in alignment on that particular trade. What I also like that I see here, going back to the 4 hour chart, is I really like, let's see, let me get this, hang on 1 second here. There we go. I really like the angle and separation that I'm seeing on slow stochastics down here. I mean, I've got strong angle to the downside, and I've got increasing angle and separation. That indicates that there's a stronger likelihood that the pair is likely to continue to the downward side. Notice all the likelies that I said in there. By no means is anything guaranteed in this webinar or in this YouTube video or in trading. All we can do is base our thoughts, our ideas on what we're going to trade based on what we're seeing on the charts at this time. So what we're doing is not predicting what might happen, but reacting to what is happening right now. That's the way I like to trade. Okay, let me get this back up here. There we go. Okay, so that was our first pair that we took a look at. And then what I like to do too is the yen has been strong pretty much across the board for quite some time. So I like to look at some other pairs. And one of the other pairs that I was noticing as I was drilling down these earlier is the New Zealand yen. And again, we've got strong indication on the weekly chart, lower highs, lower lows. And we also have slow stochastics going below, ready to break below 20 in that area. And then we also have same thing, a similar type of thing, that the Donchian channel, the lower Donchian channel here has been taken out on the daily, and it has not touched the upper Donchian channel yet. So again, in this particular situation, we are in a selling posture. We are in an open sell position looking for opportunities to sell. Now in this one, this is just about ready to trigger here. And again, we've got increasing angle and separation on slow stochastics over here, which is pretty strong to the downside. And here, I'd look at this wick right there, where that crosshatch is. And then if I go down here, again, we've got roughly maybe about 80 pips. And I mean, I don't want to turn my nose up at 80 pips, but longer term trader, I'm generally looking for more than 80 pips. What somebody can do in this situation, again, is set a price alarm around maybe 75.70. And if, when and if that price alarm triggers, you like what you see, in other words, the New Zealand dollar weak, the Japanese yen strong across the board, an entry could certainly be considered at that point, because everything we see, like we did in the Aussie yen pairs, everything we see is to the downside. We've also got the 200 period moving average on the charts, and we can see that price action in each of our 4 charts. Price action is below, 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 just broke below the 200 period moving average. Again, no guarantees, but the stars are in alignment. So we can look at this as a higher probability trading setup. And remember, setups are just that, not a guarantee, but a setup that if a pair triggers and it continues in the direction it's going, and it triggers in that direction, it's going to be a higher probability trade. Okay, let's take a look at some other pairs here. Let's take a look at the USD Canadian. I had that one in my notes as well. So we've got a situation here where the dollar is stronger than the Canadian dollar, so that's why the pair is moving higher. And we've got price action moving higher, continuing to take out the upper Donchian channel on the weekly chart. So we're in an open buy situation here. We are also in an open buy situation on the daily chart because price action touched and took out the lower channel here, but then a few days later it took out the upper channel, triggering our open buy situation, or open buy posture, if you will. So what we're looking for here is price action to take out the upper channel. This is the 4-hour chart. It hasn't quite taken out the upper channel here yet on the 4-hour chart. It has taken it out on the 1-hour, so I'd be more inclined to take a look at and see what's going on here on our 4-hour chart that we have here on the USD Canadian. So based on this, we've got price action that's had a retracement, hasn't had a full retracement. Ideally, what I like to see is price action to do this. Have taken out the upper channel back here, then takes out the lower channel while it's still in an uptrend, and then takes out the upper channel. So my primary entry would have been back here is where I would have been looking for the entry. But now this is a pretty fair pullback, obviously not a full pullback, but for a more aggressive trader, they might want to set a price alarm at on the USD Canadian pair. Let's see, let's go and look at about 134.16, 134.15, 134.20, somewhere around in there. And if and when that price alarm hits, take a look. Is the dollar strong across the board? Is the Canadian dollar weak across the board? If that's the case, you're going to have the opportunity for a higher probability trade. And then if I move this down a little bit, I'm going to adjust these better when I do it next week. See what we have here? Again, increasing angle and separation on slow stochastics. We've got an angle, strong angle to the upside, kind of pointed in the 1 o'clock position if we use a clock face here. And the slow line, the fast line is the green one, the slow line is the red one, the K and the D lines. And that one's just about ready and moving up to follow the K line up to the upside. So strong angle, increasing separation, indicating that potentially the pair is more likely to follow through given the momentum that we're seeing by our slow stochastics indicator. So again, I might set a price alarm at around that particular price level. Okay, let's see, we've got a couple more minutes here. Let's take a look at perhaps one pair. Let's take a look at one of the more widely traded pairs. Let's take a look at the dollar-yen currency. And again, here we've got, okay, here it took out the lower channel on the weekly chart. So on the weekly chart, we are in a sell posture on the dollar-yen. We're looking for opportunities to sell. We are also looking for opportunities to sell based on the daily chart because price action took out the lower channel, hasn't taken out the upper channel, and we can see on the daily chart here how it's wicking above the 200 period moving average, hasn't closed above it in several days. So we're looking for opportunities to sell. Let's see. As I look at the weekly chart, I'm looking at the area of maybe around 115.48, which is a far cry from where the pair is trading right now. Let me expand this 4-hour chart here and take a look and see when a price action, if and when it takes out that lower channel, doesn't have a lot of room to drop. It has more room to drop here, but we've got this long wick that was put in here to deal with. So this pair would be interesting to me, but it would be kind of on my back burner at this particular point. So anyway, we're reaching our time limit here of about 15 minutes. So I want to say, thank you to all of you who have been kind enough to watch these videos. I hope they're helping you. And again, any questions on trading, I'll be happy to answer them. rcrevofx@gmail.com. Thanks so much for watching, and we'll see you soon.